Joining us now is IBM Vice Chair, former NEC Director, and former Goldman Sachs President Gary Cohn. It's great to have you back. Welcome.
Thanks for having me.
Well, how do you read this?
You know, I think I read it similar to you. There's something in here for everyone, something to like, something not to like in here. But I think overall, we've got to back up and look at the trend. You know, the trend is we've got an unemployment rate at 4%. Yes, it's 30 months at 4% or under. It may be the last of 30 at 4% or under because we are trending higher on the unemployment rate. If you look at the JOLTS data along with the unemployment report, you see there's less job openings, there's less job turnover. People tend to leave a job when they think they can get a better job. And we're still seeing wage pressure. But I think the wage pressure and the job and the unemployment numbers need to be separated. And I keep arguing we need to separate them.
What do you mean?
We're very transparently seeing wage growth in the United States, and it has to feed through the economy. We see union contracts being renegotiated. We saw the American Airlines flight attendants turn down a 17% wage increase this week. We're seeing minimum wages go up in half the states in the United States. Some become effective the second half of the year. Every time these things happen, the marginal worker becomes more expensive. For us not to think there's going to be wage price inflation is hard for me to comprehend why we wouldn't think that. We see these contracts being renegotiated. We see them every day. We see wage pressure. So we can see wage pressure and we can see unemployment going up at the same time. And I think we need to understand that. So to me, it's more about what's going on in the unemployment numbers and the JOLTS numbers than it is in the wage numbers, because it's very transparent to me what's happening in wage numbers.
So I guess the question is, which should the Fed be more concerned about when figuring out when to cut?
Yeah, look, I think they're in a dilemma like everyone else. To me, I think they need to look at the unemployment numbers, and they need to look at what's going on with people having jobs or not having jobs. And that, to me, is the ultimate measure. You know, the wages are going up, and they're a one-time move as 3- and 4-year contracts get negotiated now. We're in a cycle where a lot of contracts are getting negotiated. We're in a cycle where a lot of minimum wages went up. They won't go up again next year. So this is feeding through the economy this year. So if I were sitting at the Fed, I would be looking at the unemployment numbers more than I would be looking at the wage numbers.
But even that is very mixed. I know that we see a 4% number, but we also see 272,000 jobs, non-farm payrolls added this month. We also see very few historically number of Americans that are filing for unemployment claims.
We do.
So what do you do with that?
We do. Look, what do you do with that? You celebrate it on one hand, right? We should all be happy that we've got a strong economy. You know, I know you were just mentioning there's two schools of thought. Is it the strong economy school, or we have to have lower interest rates for the market to go higher? I'll always take a strong economy. You know, at the end of the day, it's all about the economy. It's all about GDP growth, GDP, corporate earnings, the health of the consumer. That's going to win out all of the time in the long run. So the health of the economy is more important. If you look at where the jobs are being created, we're in the same big categories. Where the government came back to be a big hire again, healthcare, and our favorite, travel and leisure. You know, businesses are renormalizing. We see it all the time. People are traveling for business. It's no longer just personal travel. As we came out of COVID, everyone was trying to catch up with their vacations. They hadn't been on vacation. They hadn't been out of their house. They hadn't been out of their city for a year, 2 years. Now we're actually seeing, if you're traveling for business, which I am and I know you guys are, you're seeing real business travelers. You're seeing hotels full of conventions, conferences, and things around the world. You're seeing the business traveler come back quite heavily. So travel is renormalizing.